What's going on, traders? In this video, we're going to be breaking down everything you need to know about the Equity Stability Score, the new rule applicable to the Top 1 Futures Pro accounts. It's also something that we're seeing implemented across the futures market. This is probably something we're going to see on a lot of accounts, but we're going to be looking at exactly what this rule is on the new Top 1 Futures accounts and how you can set yourself up for success, along with fully understand it, going through some examples. Before we get started, if you want to check out Top 1 Futures and get the best deal, better than what's on the site and in the emails, check out the site right here. I'll link it. Use code RDF. You support me, support the channel. Along with that, remember guys, I am biased. I can't stand to be unbiased if I'm partnered and affiliated with a company, but I'm going to do my best to explain this in detail in the simplest way that I possibly can, give you guys some examples. So let's get started on it. What is the Equity Stability Score, the ESS rule? It states the combined number of your most profitable day with your largest losing day must not exceed 30% of the total profit when you go to request a withdrawal. So we're going to break that down. We're going to do some examples. Don't freak out just yet. But it's worth noting that this is different than the normal consistency rule that we have on the other accounts and that you see across a lot of instant funded firms. The normal consistency rule is your most profitable day must not exceed a certain percent, 20% on the top 1 accounts, right? Again, if you want to learn about the consistency rule, I have a separate video. I'll link it right here. I'm not going to go into detail on what this is, but I want to let you know the ESS, the Equity Stability Score, is different than the consistency rule. So let's jump back into this, right? Combined total of our most profitable day and our largest losing day must not exceed 30% of your total profit. Let's take a look at what that means, how this is going to work, how we can set ourselves up for success. How do we calculate that? Very simple. Combined biggest winning day plus largest losing day divided by total profit. That's how we calculate our ESS score. So this is taken into consideration the largest day, right? If you're trading and you close the day out $1,000 in profit, and you're trading and you have a tough day and you close the day out negative $1,000 in profit, negative $1,000 on the P&L, red and green, right? We're adding those two numbers together, and then we're looking at what that adds up to versus our total profit. So let's jump into it, take a look at what this actually is. Let's go through an example, right? Example number 1, very simple. We're trading an account. We do great. We got $10,000 total profit. That's actually more than you would need to withdraw across any of the accounts, right? $10,000 total profit. Our biggest winning day is $2,000. And we're going to break this down, do some more examples, but just for example here. Biggest winning day is $2,000. On our worst day, we lost $800. $2,000 plus $800 is $2,800, right? That's our first number. If we divide that by 10,000, we have a 28% ESS score, right? 2,800 is less than 30% of the total profit, $10,000. Our total of our biggest winning day and our worst losing day is less than 30% of total profit, right? Trader passes the ESS score being under the 30% mark. Let's do some more examples and then dig into how we can set ourselves up to understand this on the front end, make a good pre-plan, which I think is really important here. Here's example number 2. And I'm going to do a day-by-day example, so bear with me here. $4,500 in total profit, right? Maybe we're trading a 50K account. The profit target's $3,000. We put up $4,500 in profit. But here's how we do it. We have a big winning day of $1,500, right? We close the day out $1,500 green. And we have a pretty gnarly losing day. We have a $2,100 losing day, okay? That would mean we're going to have to add $1,500 plus $2,100. That would be $3,600. If we take $3,600 divided by our total profit, $4,500, that's 80%, right? $3,600. Way too large of our combined winning day and losing day to be under that 30%, right? So we fail. We can't request a withdrawal. What do we have to do in this situation? Because you could say, well, Zach, maybe I didn't pay attention. I'm watching this video late. I didn't pre-plan this. I already put the big winning day up, the big losing day. Am I done? Am I screwed? What do you have to do? You have to make more profit, right? Because you have that large number, that $1,500 plus $2,100 equaling $3,600. You got to get up over a certain amount to make sure that number, that combined number, is less than 30% or less. You would have to put up $12,000 in profit. Why? Take a look at the bottom. 3,600 divided by 12,000 equals a 30% ESS score, okay? Similar to the consistency rule, again, this is different, but similar to the consistency rule, if you pre-plan this stuff on the front end, you can set yourself up for success. And if you dig yourself into a big hole by putting up too large of a day or too big of a losing day, you can continue to trade, but it's important to understand how this is functioning. So bear with me here. We're going to keep going through examples, try to break this down even further, look at different ways of doing this. How can you plan ahead to meet the ESS score, right? Here's what we're going to do. Let's look at the profit target on the account that you're trading. That's what you do. You say, hey, I want to buy a $50K account. We know that the $50K pro account, this new account, has a $3,000 profit target. We have to make $3,000 before we're able to even request a withdrawal, right? If you want to request a withdrawal right when you cross over that $3,000 mark, which a lot of traders do, you would need to have an ESS score to fit that. If you say $3,000 in total profit, what's 30% of $3,000? $900. How do we get the ESS score? Our largest winning day plus our largest losing day can't be over 30% of that total profit, $3,000. So that number is $900. We know biggest day and losing day combined when we trade cannot go over $900 if we want to withdraw right at the $3,000 mark. So you can decide what you will set your largest winning day versus your largest losing day. And smart traders are going to do this. And I'm going to show you even more examples and actually exactly how to do this in another video. Set your personal daily profit target and personal daily loss limit. This is in the risk parameters in Project X. I have a video right here. I'll link it. Another tutorial if you want to know exactly how to do that. But that's what the traders that are going to succeed at this very quickly are going to do. They're going to do the math very simply, just the way we did it here. You can do this for the 150K, the 100K. If you have a question on that, ask down below, or any of this, please ask down below. They're going to look at what 30% is, and they're going to decide, okay, I want to be able to put up X amount when I win. I want to give myself X amount of risk before I cut myself off. I add those two numbers together. I know I'm within that 30%. Let's look at an example here, right? Here we go. Same thing. We have our 50K account, $3,000 profit target. We can't go over $900 combined, win or loss, to meet that 30% equity stability score. You decide you're going to aim for a $600 winning day and a max $300 losing day, right? So your personal daily profit target, the most you're going to put up is $600. You can put up less, right? But the most you're going to put up is $600. And you say, my worst day is going to be capped at $300. I can have stuff in between there, right? I can make $100, lose $50, but I'm not going to go above $600 or below $300. Why? Again, $600 plus $300 is $900. That keeps you under the 30% of $3,000 when you want to request a withdrawal, right? Here's what your trading looks like. You trade towards that $3,000 profit, and you do well. $600 profit on day one, $400 profit on day two, $600 profit. You hit a DLL on day four, you lose $300, right? And it continues. You can see how this breaks down. You put up $3,000 in profit. Okay, now you go, okay, let me see if I met this. Well, your largest winning day is 600, check mark. Your biggest losing day is 300, check mark. $900, 900 divided by 3,000 keeps you at that 30% ESS. It's worth noting as I'm doing the math, I'm using round numbers here, right? If we want to be extremely safe, keep your personal daily profit target and your daily loss limit a little bit below or a little bit above that winning and losing day. For example, you might set your personal daily profit target at $590. You might set your max loss limit at $290, right? To allow for a little bit of room so you're not trying to hit the nail on the exact head and you're going to be, a little bit over that 30% and have to make a little bit more money. Just worth noting. It's worth noting the ESS is more difficult to work with than just the standard consistency rule, since it takes into account your losing days and not just your winning days. Thereafter, a real smooth equity curve and traders that are going to control downside risk along with have really consistent profits. This does make it more difficult to work with than just the consistency rule. Now, obviously, if you look at the account, there's more benefits here, right? It's cheaper. On some of them, you have more flexibility when it comes to your max loss limit. You can copy trade significantly more of these. So there's a whole bunch of upside benefit. And if you are a consistent trader, and at very least, if you can do basic math and tailor your risk management to fit within this, you can be able to make this work, or you stand a chance to making it work, right? If you just go at it off the cuff, trading the way that you've been trading, or just not paying attention, you're going to struggle the same way the guys struggle with the regular consistency rule. Again, I can't stress this enough because this is going to be the hammering home. Understand the rule, right? Understand the math behind it. Go back through, watch the video. If you have a question, feel free to reach out, ask in the comments below. But this is the home run point I want to hit to you. The traders that succeed at taking payouts with this rule will pre-plan their upper and lower limits and set the personal daily profit target and personal daily loss limit to work within it. We have a cheat code on Project X to do this. You can set your upper limit, your best, largest winning day, and you can set your lower limit, your worst losing day. You can do that math on the front end and say, I don't know if I'm going to work towards my profit target, right? I might still lose. I might hit all DLLs and fail the account. But I know if I have these two set, I can guarantee that I stay within this this equity stability score. Those who don't do that on the front end, they're going to be stuck needing to make more profit, right? Like in that second example where we put up a big winning day and a big losing day, you're going to be stuck putting up a lot of profit, but because you didn't pre-plan it and you stay within that risk parameter, you're going to be stuck putting up significantly more money to try to bring that ESS score down. Again, guys, it's not terribly confusing if you take a second to try to read the rule, understand it, do the math yourself, do some examples. You can, again, go back through this video, fully understand this rule specifically, along with all of the other rules, and make a game plan when you start trading the account, before you start trading the account. And remember, guys, use code RDF for the best deal at Top One. Better than the site, better than the emails, better than anything you'll find, at least matching it. But most of the time, it is better, going to provide an additional discount. You can subscribe, 100% free live trading almost every day here on YouTube, answering questions, trading right from my Top One Futures accounts on Project X, and account giveaways almost every week. Depending on when you're watching this, we're doing a lot of giveaways this week. I'm going to try to get this video out really, really quickly. Along with that, guest speakers and a 100% free trading Discord. Links below the video. I'm going to try to link them all right here. You have any questions, feel free to hit me up. Remember, guys, I'm not a financial advisor. I don't provide financial advice. Trading's risky. Most traders lose money. If you decide to trade, you're probably going to lose all or more of the money that you trade with. Do your own research. Make your own trading decisions. Make sure you go to the site for the most recent information. Rules change, things change. Do your own research on Top One Futures. Read the rules yourself. Don't just take my word for it. Understand what this stuff looks like straight from their site. Make sure nothing's changed. I'll try to update in the comments as that potentially happens. Along with that, guys, remember, read CFTC Rule 4.41 on simulated trading, which is what this is, even in funded prop firm accounts, and the affiliate and partnership disclaimer that says I stand to make money from links and codes in my content, like code RDF, like Top One Futures. I can't be unbiased if I stand to make money. Trade well, guys. Talk to you soon.